Ladies and gentlemen, good day and welcome to Ganesh Benzoplast Limited Q3FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Priyadarshi Srivastava from Capital Square. Thank you and over to you, sir.
Thank you. Good evening, everyone. On behalf of Capital Square, I welcome you all for the Q3 FY24 Ganesh Benzoplast earnings call. Today we have with us Mr. Rishi Pilani, CMD, Ganesh Benzoplast, and Mr. Amar Kabra, CFO. Over to you, sir, for your opening remarks.
Thank you. Good afternoon, everybody. This is Rishi Pilani, and thank you so much for joining us on the Q3 and the 9 months FY24 conference call. We will initiate the call by taking you through the business highlights for the period under review, after which we will open the forum for question answers. Now I hand over the call to Mr. Amar Kabra, our GM Finance and Taxation, to share the 9 months numbers with you.
Yeah, hi. Good afternoon all. So I will start with the standalone numbers. Total revenue for the 9 months financial 24 stood at 1664 million as compared to 1409 million in the same period last year, with an increase of 18% by 2Y. PAT, net profit after tax, for 9 months of FY24 is 444 million as compared to 387 million in the same period of last year, with an increase of 15% by 2Y. EPS for 9 months for financial year 24 stood at 6.64 rupees as compared to 6.20 rupees for 9 months of this year, with an increase of 7%. Now on consolidated basis, the total revenue for 9 months of financial year 24 stood at 3308 million as compared to 2868 million in the same period of last year, with an increase of 15% by 2Y. Net profit after tax for 9 months of financial year 24 is 471 million as compared to 403 million in the same period of last year, with an increase of 17% by 2Y. EPS for 9 months of FY24 stood at rupees 7.04 as compared to 6.47 for previous year, with an increase of 9%. So with that, I have given the highlights for the result. Now we would like to open the forum for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Meet Mehta from Halley Stock Traders. Please go ahead.
Ganesh. Yeah, sir. Hello.
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 Yeah, sir, I wanted to know, we did a fundraise right now of 62.5 crores. So can you explain us what is this fundraise for and where it is going to get utilized?
Yeah, see, the fundraise is mainly to put the equity portion of the expansion that we are doing into cryogenics, as you are aware, which we have already announced. So the fundraise primary objective is for that.
So, sir, if you can, delve more upon to the expansion. So what is the total expansion and what is the timeline? If you can give us some economics about the project.
So, see, roughly the project cost is about 650 to 700 crores, out of which the equity contribution from GBL is going to be approximately 100 crores.
Okay.
And the project timeline is, I've already given, we are expected to finish it in about 2 years' time, starting March of 24. So it's expected to finish in March of 26 April. So first quarter of the financial year FY27, that's when it's expected to complete.
So the entire thing will start, or it is going to be, in phases? How does the expansion work?
No, it starts at one go.
Okay, it starts at one go. Okay.
Yeah.
And what sort of revenue margin should we expect, from this kind of project?
See, generally, these kind of projects run at an EBITDA margin of 80% plus.
Okay.
And currently, we have a guaranteed revenue over the 15-year period of about 1,200 crores from one company, approximately. And what we are expecting is that this is the minimum guarantee that we have received, and with other customers, we should at least be able to achieve 3 to 4 times this. But again, these are all projections, so they are not, we don't have any signed contracts for the balance amounts.
Okay. So basically, these are cryogenic, tanks that we are building, which will be used for liquid logistics.
Yes, correct.
Okay. And you also mentioned that you've been allocated 4.5 acres land for this project for 25 years, and you've somewhere mentioned that it's a advantage to have that land parcel. So can you explain how does that work? Because is it non-availability of land or permission, or what is the idea?
See, it's a combination of land, pipeline, and the first mover market. So, as you can understand that there are other people who are having some spare land in JNPT, but the spare land is so less that as of now they cannot build any cryogenic tanks on them. And apart from that, you require cryogenic pipelines from the jetty to the terminals, for which we are having the approval only. So a combination of these two things gives us, a very, very high barrier to entry into this space of cryogenic in JNPT rather than anybody else.
Okay, sir. All right. And sir, your Goa terminal is underutilized. Can you explain us how you plan to, increase their utilization levels and going forward?
See, we are doing different products there, and we are expanding our portfolio in Goa. It was a dedicated fuel oil terminal, so we have converted those tanks back to white oil. And now we are doing edible oil, specialized chemicals like EDC. Most recently, we've even started POL products. So we've done motor spirit, we've done HSD, we are doing molasses exports. So we are trying to look at different revenues, and we have been fairly successful in attracting new customers.
Okay. What would be the utilization level in Q3? The quarter
See, in Q3, we are expecting a chemical tank to be taken up. So I would say it will be upwards of 50 to 60%. That's what our expectation is in Goa.
Okay. And the NPD terminal is at 100% utilization?
Yes.
Okay. And Cochin, what is the utilization level?
So Cochin is also upwards of 95%.
Okay.
We have right now won a tender for Cochin terminal from IOC, though the LOI and all has not been issued, so we don't have it in our hand, but we are the L1 bid. So we have won the tender. So those tanks will be taken over by IOC for ATF and ethanol for the next 4 years.
Okay. So, but there is little scope of, because it's already at 95% you're saying, so revenue growth?
We will have to do what we always do is what we call as a replacement strategy. That as the current contracts keep running out, we'll instead of renewing those, we'll replace them with IOC.
Okay. Okay, sir. I'll get back in the queue for my further questions.
Thank you, Meet.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 3 per participant. Should you have a follow-up question, we will request you to rejoin the queue. Thank you. The next question is from the line of Dhruv Mukesh Bajaj from SmartSync Investment Advisory Service. Please go ahead.
So firstly, congratulations on securing amazing joint venture partners. My first question was that since we have earlier guided that we will do a capex of around 400 to 500 crores in the LPG terminal space. However, now you are guiding that the capex will be around 650 to 700 crores. So can you please explain the divergence? Like, have you ventured into some new venture as well?
No. What we are doing is that based on what is going to be the projected demand, we are actually increasing the size of the tankages now. Because we want to build a terminal that's way ahead of all the other terminals that are currently existing. And the current ship sizing, which was in the range of 40 to 42,000 tons, is now going up to 50 to 55,000 tons each ship. So we want to be ready for that. So we are increasing the capacity of the terminal also by about 20 to 25%.
Got it, sir. So the terminal that you mean is LST terminal, right? Or LPG terminal?
LPG.
Okay. And sir, what is the revised revenue potential of the respective segments, as we are earlier guiding a 200 crore sales mark, assuming a conservative throughput of 3 times per month. But now since we have good JV partners and we are increasing the capacity, so can we expect this to improve going forward? And so what will be our share?
See, like I said, these are all forward projections, so I don't want to get into them. But see, logically, if you have a terminal that is able to handle the largest ship, which gives the lowest shipping price per ton to any customer, so you would expect that you would be able to pull more volumes and higher throughputs by doing this. And that's the logic behind increasing the terminal size. As you know, BW LPG, they are one of the largest LPG companies in the world today, having more than 250 ships that are carrying LPG all over the world, and they have stock positions in various refineries. So we go by their guidance.
Got it, sir. So it would be too far-fetched to assume that we might be able to clock the 7 times industry level throughput that other players crack, right?
Yeah. I would not like to comment on what we can do, but we would certainly hope to get the maximum throughput out of the terminal.
And sir, now, okay. And then how is the competitive intensity in the terminal space? Like since Aegis has recently set up a big LST terminal in JNPT port. So can that have a negative impact on our realizations or utilizations? Or how is the dynamics like?
See, I can't comment on how that will play out, but all I can say is that they are not setting up a LPG terminal in JNPT.
No, I meant LSD terminal, liquid storage terminal. So they have recently announced that. So that's what I'm asking.
Yeah, see, generally, our terminals being older and having more customer base already established, we have to wait and see how that impact happens. But today I cannot comment on that. But I'm sure some things will need to be adjusted from our side to ensure that we remain competitive to our customers and we give them the best service.
Got it, sir. And sir, if I can just squeeze in another question, then post-COVID, our rentals are rising in double digits in JNPT. So is this likely to continue going forward, or should we model a conservative 5 to 7% growth mark that you earlier talked about?
See, I whatever we are doing, we are always striving to get the maximum revenue per ton out of the tanks. So changing the product mix, changing the customer base, all these things we are continuously striving for. But all things being equal, like I've always guided, that in a business like LST, 5 to 10% is a fair assumption that you should be able to achieve.
Got it, sir. Thank you. I will join back the queue.
Thank you. Thank you, Dhruv.
Thank you very much. The next question is from the line of Yogesh Bhatia from Sequent Investment. Please go ahead.
Yeah. Sir, there was a proposal for demerger of the chemical business. Is it still under process? What is the status of that?
Yeah, see, that proposal is already is under process, number one. Number two, the thing is that matter is subjudized due to a court case that we are having. So for me to give timelines is becoming difficult, but in the meanwhile, what we have done, just so that you know, that what we have done is that we have put the entire chemical business into a 100% owned subsidiary of GBL, along with the creditors, the sales, purchase, all the things are in a now 100% subsidiary, so that whenever this order gets out of the court, we can, it will not take us much time to get the demerger executed, because the separate balance sheets already exist now.
Mm-hmm. Okay. Yeah. Okay, sir. Thank you, sir.
Thank you very much. The next question is from the line of Parth Kotak from Alpha Plus Capital. Please go ahead.
Hi, sir. Thanks for taking my question, and congrats to you and your team for a decent set of numbers.
Thank you, Parth.
So just a couple of questions. One, you talked about the project cost being 650 to 700 crores. How much debt are we planning to take in the project?
So we are targeting right now equity debt mix of about 30 to 30-70.
Okay. So equity of 30 and debt of 70.
Yeah. Yes. But all these are long-term debts. They are running over 15-20 years.
Right.
And the way we structured the transaction is that we have a minimum guarantee from our partners to service the debt. So the debt and something more than that. So we are not worried about the debt hitting the balance sheets.
Fair point. And sir, secondly, you mentioned about the capacity being bigger than earlier projected. If I'm not wrong, we had projected a capacity of 48,000 tons. We've revised this number and taken it upwards. Is that the right understanding?
Correct. So we are looking at somewhere between now 55 to 60,000 tons.
Oh, okay. Perfect. That is encouraging, sir. That is it from my side. I will join back the queue if I have questions.
Thank you.
Thank you very much. The next question is from the line of Gaurav Agarwal from 91 Capital. Please go ahead.
Hi, sir. Thank you for the opportunity, and congratulations on decent set of numbers. Sir, you are getting... Yeah. So, sir, I wanted to check your plans, like we are currently undertaking this large capex. Do you have plans to get into some other things like hydrogen, or which comes under cryogenic, or you mean to say you can be in the storage of cryogenic products? What are the other products that you have in mind, or other projects that you have in mind?
So we are constantly looking at projects. So obviously right now we are exploring other cryogenic expansions, like there is possibility of propylene, ammonia, all these. So we are looking at everything. But as soon as we have something concrete, we'll definitely inform our investors and stakeholders.
Okay. And sir, in terms of your capital commitment, now that the project size has increased, So what will be the capital commitment from our side over the next 2 years in terms of cash flow?
So, like I said, it's going to be about 100 crores.
Okay. And similar kind of thing will come from BW/Confidence, and the remaining will be debt.
Yes.
Okay. Okay. Okay, sir. Thank you.
Thank you.
Thank you very much. The next question is from the line of Ram Tava from XLR. Please go ahead.
Yeah, hi. So regarding this JNPT, there's a new space that has been added up for 11-acre area. So what are the strategies that are in place to fully maximize the utilization of that entire space, and how much time it would take in the future for that?
So part of the land has already been utilized by the new chemical tank expansion, which was commissioned in July of this year, last year, and the balance will be utilized for the LPG expansion. So after that, there won't be any spare land available.
Okay. So we are considering this demerger of this LST division, the infrastructure division. So what strategies or opportunities are in place related to the future business opportunities, ensuring its long-term success and scalability?
See, very simple that while we have this project coming in, which if all goes well, should have a very, very significant impact on your revenue and profit margins within 2 years to 2.5 years' time. Apart from that, we are looking at other organic and inorganic plays on how to increase capacities or utilizations. So like you said, like I explained, like we have locked in a tender with IOC. So the LOI is not issued yet, but we are hopeful to get it soon since we are L1 for next 4 years of ethanol and ATF tanks. So what these do is they lock in our revenues and profits, and we look to grow with that. Apart from this, we are looking at other ports in which we can expand, and that activity goes on completely independent of these two things. But we are looking at how to expand our growth in this in the LST field.
Okay. So, but how stiff is the competition when it comes to other ports to acquire the land parcels? How stiff is the competition, sir?
Well, competition is there, but I mean, there are opportunities for, like I said, either buying out existing players or to, get new land and set up new terminals. So those opportunities have not gone. But yes, competition always there, and that's fine. I mean, all the ports that we are operating at today, whether it be JNPT, Goa, Cochin, there are other competing terminals, and we are proud to say that we have probably fairly well placed in spite of all the competition around us.
Okay, but
in terms of customer retention and in terms of revenue per ton, I think we are doing fairly well.
Okay. And in terms of the government initiatives, they're building new ports as part of Gati Shakti and other initiatives. So how do you see the future for this, sir? I mean, like Adani and some of those new ports that have been getting built. Do you get opportunities for there as well?
See, I mean, we are exploring everything. We already, through our subsidiary ILSL, we are already in what you call the multimodal mode of operation by rail. We have already developed expertise of setting up liquid sidings with tanks along the railways. So we always look for opportunities where we can expand in those areas also. Unfortunately, I don't have anything very concrete right now to tell you on a call. But if your question is that are there opportunities, the answer is yes. Are we having the technical, financial know-how to exploit them? Again, the answer is yes. And are we actively pursuing those? Again, the answer is yes.
Awesome. And how about these rental yields in the future? Assume that we get a new land parcel, right? So how will be the rental yields? Will be at par with what we have been getting? Because these contracts, what you have with the current land parcels, maybe 10-year-old, 15-year-old, the prices what you would be paying would be different from now. So can we expect the same kind of rental yields or give or take?
See, whenever there is a renewal of a lease from a port, obviously the rentals from the port will get revised upwards to reflect current market pricing. So if that's your question, then yes, they will get revised, but they are not the lease rental is not such a huge contributor to the overall cost structure of your system. But yes, it has a potential to have some impact.
Okay. And that will be passed to the customers as well, because we are increasing 5 to 8% rental every year. So I think that can be passed.
Yeah, it will be a combination. See, nothing will be only impacting GBL, right? So if in a port, if the lease rentals go up, it's something that sooner or later all the terminals will end up paying, maybe 1 year here or there. So the impact has to get transferred to the customers directly, indirectly, whichever way.
Okay. That's all from my side. Thank you.
Thank you, Paul.
Thank you.
Rama, thank you.
Thank you very much. The next question is from the line of Rohit Singh from Invest Analysis. Please go ahead.
Hi, am I audible?
Yes.
Yeah.
Good evening, sir. Just to understand the things in a better way, can you put some color on the outlook near to midterm, putting some color on the kind of growth we are looking from here on, and what are the underlying factors that will play out?
See, like right now, from our current operations, like I said, we have this steady 5 to 10% growth. I mean, we are lucky we've been doing the right things, and we have been achieving double digits high, close to 15 to 20% growth. But 5 to 10% is something that we expect. 20% is something that we strive for. So for a near to midterm basis, what you can look at is that from the current numbers, that's what you should expect. Going forward, with the LPG project kicking in, the cryogenic projects kicking in, you would expect that you should see a significant jump in these numbers in multiples, and that is what we are trying to achieve. And we'll probably come to know more, but that's the midterm and future outlook for now, if you can see.
So when you say midterm, so by when do you expect these LPG and cryogenic expansion plans to ramp up?
About 2 to 2.5 years.
Until then, we are expecting a growth of 5 to 10%, right?
Yes.
And so secondly, on your margin side, so if I look at your numbers, in FY23, we did 40% OPM. Before that, we were in the range of 25 to 30% OPM. So what is the reason for the substantial growth in OPM, and what is the sustainable margin going ahead?
See, you can see the number, 9 months number. So this is a combination of your rental income as well as your this EPC business division. So on rental income, you are getting a fixed EBITDA of around 52 to 55%, and overall EBITDA you are getting 50%. So with the growth of 8 to 10%, I think that will continue.
So these kind of margins are sustainable is what you are saying, right?
Yes, yes.
40% OPM is sustainable, okay.
Yes.
And sir, lastly on your capex side, so can you put a number to the capex what we are doing towards the LPG or cryogenic side?
Yeah, it's as explained Rishi, it's 650 and between 650 crore to 700 crore. That's the capex for LPG.
And what will be the mode of finance?
It's a combination of debt and equity. Debt will be around 70% and equity will be around 30% of the entire cost.
Understood, sir. Understood. That's it for my question. All the best.
Yeah. Thank you, Rohit.
Thank you very much. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Hello. Thanks for the opportunity and congratulations on the good set of numbers. Regarding this JV, the capital infusion of equity will be done by us, but the debt, about 70% odd of the 600 crores, will be done from our end or from the JV's end?
It will be done from the JV end.
Okay, so it will be combined debt.
Yes.
Okay. And what is the minimum throughput which is guaranteed from the Confidence BW JV?
It's over a period of 15 years, it's about 11 to 1200 crores.
Okay. And per throughput, what is the revenue usually?
See, general rentals in the market range between 1200 to 1400 rupees per ton, and throughput is about 50 to 55,000 tons.
Okay. Okay. Got it. And about the 18,000 KL capacity, which was going to be live from Q4, what's the status on that?
No, that capacity was live in Q3 itself.
Acha, it was live in this quarter as well. Then why there is no sequential growth as such?
See, as on date means the capacity started in somewhere in October, so obviously it will take some time. 1 month is the gap. So capacity gives the total revenue of around 10 crores in a year. So for 2 months, it's a 2 crores. So I think that is already incorporated in that result.
Okay. Okay.
So there is no substantial.
We can assume that full 3 months will reap the benefit of this additional capacity.
Yes.
Okay. Okay. Thank you. Thank you so much.
Thank you, Sarvesh.
Thank you very much. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir, and congratulations on a great set of numbers. So a lot of my questions have been answered. Just wanted to say sorry, sir, for just making you repeat the answer. The minimum throughput, what did we say, sir? I couldn't catch hold of it. Sorry, I have some network issues.
So over a period of 15 years is between 11 to 1200 crores.
And so that would be what you call it, our part of it or the combined JV?
No, it is throughput is something that our partners are guaranteeing to us.
Okay. So just I wanted to know in terms of our expansion that we are doing of 650 to 700 crores, what kind of an asset turn would we be able to generate?
Sorry, Darshil, your voice is not very clear. I'm not able to understand.
Just a second, sir. I hope so my voice is better right now.
Now it's better.
Yeah. Sorry for that, sir. So just wanted to get a sense of if you're investing around 700 crores in our expansion. So what kind of an asset turn do we expect? Like we could do how much revenue because of this? We could get how much potential revenue from it?
See, like I've already explained in my earlier calls, we would ideally like to be at a space upwards of about 200 crores of revenue a year. That's what would be our minimum target.
Okay.
But like I said, these are all future projections. So we will only come to know once the tank farm is built and commissioned. But that is based on a market analysis by us. That is something that should be achievable.
Oh, okay. So that's great to know, sir. And so just wanted to know, sir, as you've also done our EPC, so any kind of traction that we see out there right now, any other tenders or something that we are applying for?
See, Darshil, I've always maintained that EPC is not our core business. We use EPC only as a strategic arm to expand our core business, that is LST. So, helping out customers who are requiring expansion in their plants, which in turn leads to better business for us, or, expanding capabilities of some of our customers so that they can store a different type of product at our end. So these are the things we focus on, or if we want to develop relations with a new customer or something. So that is where our EPC division is used for. So we are not going out in the market and trying to bid and get projects.
Okay. So, sorry. Okay.
Our core focus is our EPC, our LST division and the functioning of that. So we like to keep ourselves on the core focus.
Okay. Yeah. And there is one final question. So with the new expansion, if it would be with the, be able to maintain higher, so will that, somewhere, because we might be at a lower cost that we will be offering to our client, will the margins be similar to what we are doing right now, around 50%, or would that, be just what would be the color on that?
No, so you are asking about LPG, right?
Yeah.
Yeah, so generally LPG terminals operate at about anywhere close to 80% margins.
Oh, 80% margins. Okay, perfect. Sorry, so just for clarity, these margins you're talking about EBITDA, right?
Yes. Yeah, that is EBITDA.
Okay. Thank you so much, sir. Thanks. Help me.
I wish it was Pat.
Yeah. Yeah. Okay. Thank you.
Thank you.
Thank you very much. The next question is from the line of Gagandeep from Invest Analytics Advisors LLP. Please go ahead.
Hello.
Hi.
So what kind of margins will be there after the expansion in LPG and cryogenics expansion?
See, like I just now answered, we are expecting that generally these terminals run at about 80% EBITDA margins.
LPG and cryogenic expansion, which we are talking about after 2.5 years.
Yeah.
Understood, sir. And can you elaborate on the role that we are going to play as our economy is shifting towards the hydrogen? So can you put some color on that? Spend few minutes on that.
Yeah. So see, basically ammonia is one of the basic ways of carrying hydrogen. So we are looking at what we can do, like I said before, in the liquid gases field. So yes, ammonia is one of the tankages that we are looking at, which is ultimately transforming into also hydrogen. But that's we don't have a concrete contract or anything with us yet, but we are actively pursuing that opportunity.
Understood, sir. That's it from my side.
Okay. Thank you, Ganesh.
Thank you very much. The next question is from the line of Naitik Mohata from Sequent Investments. Please go ahead.
Good evening, sir, and thank you for the opportunity. Most of my questions have been answered. Just couple of clarifications here. So the 3 different terminals that we have, so is it fair to assume that the revenue generation would also be linked to the different capacity as well as utilization levels, or is that the product mix in one of the terminals or the other makes a huge difference with respect to that?
So you're right. I mean, the same type of tank with a similar type of capacity may have different yields depending on location. So like as of now, what we are observing is that JNPT gives us the highest yield per ton of installed capacity.
Right, sir. Sir, would it be possible to give a sort of a tilt or a ballpark figure, like how much of the total liquid storage revenue comes out of JNPT?
Yeah, it would be close to 90%. Oh,
okay. So, sir, I was trying to understand that, apart from the new terminal that we are planning to come, that will come up 2 years down the line, until that, we have, the levels for our growth would be, prudent product mix change from the management among these terminals or any inorganic opportunity that comes up, like the product change that we are probably planning for coaching for the IOC contract.
Yeah. So that's one of the ways we are doing it. But yes, we are looking at inorganic opportunities also. But as of now, we don't have anything concrete to commit on.
Okay, sir. Could you give any ballpark size, what kind of capacity we are planning for any inorganic opportunity?
No, it all depends on what is available in the market. So obviously, we are open to any type of capacity. But as of now, like I said, we have some discussions going on, but there is no concrete thing. So to give a number is too premature at this stage.
Okay. Also, sir, for a new project, we would be putting up the equity, and we have raised funds for that. So now, from here on, do we need more funds, or do we plan to raise more funds through a pref or anything like that?
See, all this depends on how other opportunities pan out along with this. If you're asking for this project per se, do I need more equity? No.
Okay. Perfect, sir. Thank you.
Thank you.
Thank you, Nitin.
Thank you very much. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, hi. Thanks for letting me, take this question. The first one was, the entire land that we've been allocated, the additional land at JNPT, are we using is the entire land being used for this LPG project, or what percentage of that will be using? And
yeah, so already explained by Rishi, so I am repeating again. So out of 11 acres, 4.5 acres is already used for our chemical tanks, and balance land we are using for our upcoming LPG. So that is the combination.
so after that LPG project, we will not have any spare land left, right?
Yeah, as on date, there is no further land in JNPT.
Okay. And in JNPT, what would be your market share if you just look at the LSP terminals that you have today? What would be your market share as of date in JNPT?
Are you asking in terms of the total liquid third-party volume being moved in JNPT?
Yes.
So that would be close to about 60%.
Okay, got it. And, since over 90% of your revenue is from JNPT, how do we look at future growth in terms of, you spoke about it, but just adding new ports or, getting newer ports or something, is there scope, is there potential, and at what stage are we on discussions on that? Can you throw some light on that?
See, I can just tell you that yes, we are looking at new ports, new opportunities. The discussions range at various stages from just the initial site visit to actual, layouts being discussed as to what can be built in the particular lands that are available. So it's that range of discussion that's happening.
Okay, got it. And just the last question on the Goa terminal, right? I think you did mention, but by when do you think we could see that also starting to actually, have better utilizations, and how should we think about that? Because that's obviously underutilized.
See, first of all, Goa capacity is less than 7 to 8% of our overall installed capacity. Number one. Number two, with Goa, you have to understand that Goa is not per se a very strong industrial region. It's a tourist region. So we are developing other products. Like I said, last year for the first time we developed molasses there. This year for the first time we did POL, diesel and petrol handling there. So we are developing new products which can cater to the region. But for me to give a firm timelines to when we are expecting these is very difficult.
Okay. Okay, got it. And just, sorry, one last, when we look at the margins, we are obviously in the liquid LFP side, where we are 56, 57. Aegis, for example, seems upwards of 65, 68 on the LFP side. What do you think is driving that? Is it only product or location or what? And is there scope for us to improve margins?
We have not seen the EBITDA of Aegis, but I think we are maintaining the constant EBITDA of around 55%, at least from rental business. On overall basis, you will see the reduction in the EBITDA, but for rental, 55 to 57% is our margin.
Okay, fine. Thank you so much, and all the best.
Thank you. Thank you very much.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. Thank you. Next follow-up question is from the line of Dhruv Mukesh Bajaj from SmartSync Investment Advisors Service. Please go ahead.
Thank you so much for giving us another opportunity to ask the question. So can you please help us understand that?
Sir, you are not audible. Can you speak louder?
I'm audible now?
Yes, now.
Yes, sir.
Yeah. So I was just asking that if you can help us understand the new JV development with BW Confidence, where we are planning to develop LPG import infrastructures, since we already have one JV for LPG terminal in JNPT. So is this other JV a new venture or segment that we are planning to exploit in future?
No, I'm not sure. So the JV with BW LPG and Confidence is going to develop the import infrastructure at the port and the storage together. Because storage without...
Sorry. So in the investor presentation, we have mentioned 2 subsidiaries. One is GBC LPG Private Limited and one is BW Confidence Enterprise Private Limited. So that's why I was confused, like, why these
there is no BW. So BW and Confidence together have formed a company which will be the JV partner with Ganesh Benzoplast.
Got it, sir. That helps, sir. Thank you so much. And sir, when will our existing lease on the JNPT, Cochin and Goa port end, since we got this land pretty cheaply in the past?
Yeah. So there are various periods that are coming up in the next 5 to 10 years when these will expire.
So once we renew the lease, so I know this will be very forward-looking in nature, but do we expect that even if we buy the land at current levels, we will still be able to generate the similar types of returns on capital that we used to generate? Or that is something that will naturally go down a little?
See, it's all the way to look at that, that your rental yields are also going up every year.
Right.
And the percentage of your cost that comes out as lease is a relatively small percentage of your overall costs. So when you combine these two, that your top line is growing by, let's say, 5-10%, but your costs, a small portion of your cost even doubles. So with a 55% EBITDA margin, we can maintain that. So it's not a...
Got it, sir. That is very helpful. And if I can just squeeze in one last question, then I wanted to understand that since we have so many strong capex opportunities in the existing ventures, and we are actually diluting our equity base by raising funds from external shareholders to do this capex. So can you please guide us to why are we venturing into something like EV leasing, as you mentioned in your annual report, or ethanol, where our stake is already a priority 26%, and where we don't have a major competency as such.
No, so I don't agree about the competency part. We have basically established ourselves as a chemical manufacturer in 1986, and manufacturing ethanol is a very, very relatively simple, distillation process, a fermentation distillation process. So technologically, there is no lack of competency in that. Plus, you have to understand that as a company, we all need to, and all companies need to start focusing on green initiatives, sustainable growth, and that from that perspective, the company needs to also look at what are the future opportunities in green fuel and how we can link them to us. So like, for example, if we are the largest exporters, one of the largest exports of molasses happens from our terminals. So we know the molasses sourcing and molasses buyers very well. So, and the raw material for ethanol in the plant is molasses. So having leveraged that partnership to go into a green energy segment and then leveraging that partnership to start molasses in Goa. So while you may be looking at ethanol as one segment, we look at it as a overall complementary part of GBL LST division.
Got it. So that is very helpful. And so sorry, I just meant that since we're making very good returns on equity in the existing division, so why are we diversifying that? But I understand your point. Thank you so much, sir. And all the best for the future endeavors.
Thank you.
Thank you very much. The next question is from the line of Piyush Kumar from Mint Investments Limited. I request the participants to limit their questions to 2 per participant. Thank you.
Hello, sir. Congratulations for good set of numbers. My question is, what are the growth triggers for growth in revenue and bottom line for next 2 years till the CapEx get operational, as the capacity utilization JNPT and Cochin are at higher level?
Yeah. So currently, we are making a rental income of around 150-155 crores for a year. And as explained, we are seeing escalation of around 8 to 10% in rental kind of business. JNPT, we are operating at 100%, but still there is chance of more revenue from JNPT in terms of product change and modification of the tanks, height increase, etc. So there is a further scope of, you can say, around 3-4%. Goa, as explained, we are already running at 40-50%. So there is chance that next year or maybe in next 6 months, we will achieve at least 70-75% in Goa. So that will contribute some more amount. Cochin, already we are running at 95%. So you can take assumption of around 12-13% cumulative as a growth from the existing business. And the major jump you will see from the LPG only after 2 years.
Okay, sir. Got it, sir. And what is the update on the merger of chemical and LST division?
See, it's already under process, but it's not yet finalized due to the court case going on. And once it will be resolved, then we are ready with the base. We have already created the base for the demerger. Just we are waiting for the order, and then we'll get the demerger order from the court and seal it. That's it.
So what time you are expecting to get the order? Any estimation?
As you know, in India, fighting with the court cases and all these things, there is no fixed timeline for all such things. But we are trying our level best to get it resolved as soon as possible.
Okay, got it. Thank you.
Yeah.
Thank you very much. The next question is from the line of Pratik Bhandari from Art Ventures. Please go ahead.
Hi, good afternoon, sir.
Yeah, good afternoon.
So I had one query regarding the capex that you stated regarding 650 odd crores. Is it the combined capex for the LPG terminal and the cryogenic tanks?
It's LPG is only cryogenic project. So that is for LPG. You call it as LPG or cryogenic, that is one and the same.
Okay. Okay. And you stated that you would be doing this through 70% debt and 30% equity.
Yeah, that is the approx ratio.
So that 30% of equity, that comes around about 180-200 odd crores. Is it coming from the fundraise that you did recently?
Yeah, part amount has come from the fundraise, and part obviously will also fund from our internal accruals and all these things.
Okay. Okay. Thanks a lot. Thanks.
Okay. Thank you.
Thank you very much. The next question is from the line of Yogesh Bhatia from Sequent Investments. Please go ahead.
Sir, all my questions are answered. I just want to know what is the rental revenue that we are making from Cochin terminal right now, and after the new contract, how much do we expect that to go up?
See, I cannot give the exact number in terms of rupees, but yes, Cochin overall contribution of Cochin is around 7% of the total rental. 90% is of the JNPT and 3% is of Goa. So that is the approx combination. And with the new contract, obviously, it will be something more out of the existing.
Okay, sir. Thank you.
Okay.
Thank you very much. The next question is from the line of Vikas Mistry from Moonfort Ventures. Please go ahead.
Yeah, Rishi, thank you for the opportunity. I have a couple of questions. When you say that you have a minimum throughput of maybe 1,100 crores for 15 years and a revenue of 200 crores on this LPG station, so what is the minimum level that is guaranteed the revenue comes out to be lesser than 80 crores, around 80 crores? Is that right understanding?
Yeah, you're right. Like I said, that is just the minimum guarantee. That's not the full potential of the terminal.
Yeah, I was trying to think only on minimum part because for maybe a couple of years you might not ramp up at full capacity. And what is your outlook for ramping up to the full capacity in how many years you can reach there?
Well, like I said, our partners are the biggest handlers of LPG in the world as on date. And their outlook basically has made us increase the capacity of the terminal by 25%. So you can take a judgment from that when our partners who are investing along with us are expecting that bigger ships will call in bigger numbers at the terminal. I mean, that itself is a good enough indication of what is expected to happen.
Okay. One of my other apprehensions that I think this consortium of 3 companies and 2 companies, BG and Confidence, are trying to infuse only 80 crores. So I didn't understand they are infusing 80 crores and you're infusing 650 crores. How it work out?
Misunderstood that. They are not infusing 80 crores. The equity participation will be in the level of equity and the debt will be raised externally.
Oh, okay. I understood that. And my final question is that from 70% debt, how we are planning to get funds from which sources, some green sources outside India, within India? What is our strategy for raising 70% on debt?
Sorry, can you please repeat the question?
I want to understand, sir, we are raising substantial amount of debt for this LPG terminal. For that, we need a lower cost of funds. So for that, what is our strategy to tap in overseas market or to get it from within India itself?
No, see, the way the debt has been structured is that the minimum guarantee from our partners will cover any debt repayments.
Okay.
So the debt structure has been made in such a manner that along with the interest also, you will not have any trouble in servicing the debt.
Okay. That's heartening to listen, and that's all. And congrats for huge capex.
Thank you.
Thank you very much. Due to interest of time, that will be the last question. Participants who did not get chance to who did not get opportunity can get in touch with management later. I will now like to hand the conference over to management for closing comments.
Thank you. I would like to thank everybody for listening to our third quarter 9-month update investor call, and request all to be in touch, especially if anybody didn't get a chance to ask any questions or have any follow-up questions. We remain available to answer all and give you and make it happen. So thank you so much.
Thank you. Thank you all.
On behalf of Ganesh Benzoplast Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.